Well, let's take a little bit of a look at what's coming up tonight in terms of the Bank of England. And, well, the central bank is expected to raise 25 basis points. To discuss the implications, especially for the pound, Nick Twidale from FP Markets joins me live at the desk. Nick, great to have you here.
Thanks very much.
Really appreciate it. Actually, before we jump ahead to that, we were just discussing off air briefly some of the, well, perhaps lighter trading conditions, thinner trading conditions that seem to be going on in the market. I was joking about it off the top with the price action we saw this morning. But I'm not making things up. We're looking at pretty thin trade at the moment.
It has been very thin this week as well. I think last week we had such a busy calendar, data, Fed week. Everyone's just taken it as, it's just been a bit of a chill out start to the week, for want of a better word. And we're certainly seeing volumes massively down. And speaking to a lot of people in the market over the first few days of the week, it was like, we're just waiting for US CPI. And now we've had it. And let's be honest, it's sort of come out pretty close to expectations. There's a few stories around that 0.1 on the yearly number is a little bit lower, and that there's a little bit of optimism from that. But in essence, we're pretty much where we were before CPI, and the market's reacted accordingly. We've had a bit of a knee-jerk reaction across currencies and across stock markets. But we're kind of back there, and I think everyone's just having a little bit of a break and looking at where the real concerns are. So it's been a strange trading week for sure. Yeah,
definitely. A little bit dull to say the least, unfortunately. But well, Bank of England tonight could throw the cat amongst the pigeons at least slightly, because one central bank expects to hike again, and well, even continue hiking. So, what should we expect from the central bank this evening?
I'm looking at. I'm actually sort of still on the hawkish side with the UK. Like the inflation numbers have been and are sticky and still high. I think we had a report this morning from one of the think tanks over in the UK, and they're expecting inflation to be at 7.4% at the end of the year, and then still sort of just under 5% next year. So in those conditions, you can't see them pausing for too long, or if at all. So, at the moment, I think most of the market's firmly expecting 25 tonight. I don't think there's going to be any surprises there. We'll be looking at the votes. They're probably going to stay the same. But I'm going to be looking at the statement and what we get from the press conference to see if there's anyone actually maybe pushing for 50, or certainly looking for the next months and the next meeting to see if we're going to get more rate hikes. Now, that's not in line with where the market is, but looking at the data, and if the numbers come out and the BOE's expectations for inflation are a lot lower than, I think it was NISA that came out this morning, if it's in line with the BOE, then maybe we do get a pause. But if the numbers keep coming out to that top side from inflation, then I think they have to keep hiking.
Yeah, definitely. With an inflation rate at 10% and a key bank rate of 4%, I'm only a simple man, but it seems like it needs to keep going up to me.
Exactly, and it's going to be painful, and even obviously I come from the old country, and speaking to people over there, they're saying it is going through the roof, and you hear guys that have gone back on trips, and it's inflation. It's very real, and it is hurting people. So I can only see it going up at the moment.
Yeah, okay. Well, let's talk about the implications for the pound perhaps, because we've come with a few charts. The first, the cable, and this is the hourly chart we're going to begin with. The technicals, what are they saying to you right now?
We are at highs, right? The dollar's taken a battering recently because of that movement in expectation that we're going to have a pause from the Fed. I think if we do get a hawkish hike, which I'm leaning to for the cable, then we can break through those highs, and it sort of opens the way very swiftly for 130 in the cable as well. So I think that interest rate differential case does point for more topside in sterling, and probably against the euro as well, which I think we'll come to in a little.
Yeah, we will come to that in a moment. We'll get a look at that daily chart too, for a bigger picture view, and you can see structurally it's a pretty clear uptrend, and of course I guess that's the 200-day moving average, if I'm not mistaken.
Yeah, that is and that's sort of coming in. If you look at that, it's bounced nicely off that on the last about 10 occasions, I think, for a while there, and once it broke back through it, it's come up. So you can see there, it's not a brilliant trend line, but it breaks through there and it opens that way for sort of 130, 135 very nicely.
Yeah, definitely, and that's of course too back towards those sort of longer term averages, I suppose, for the cable, which has been historically very low.
Yeah, we historically, those when we were. It doesn't seem that long ago we were talking about parity parties coming into play, and then we're back to, I think most people in their heads that 140 level's kind of a fair value. For some reason 165 was always in my head, but I think that's the first time I became aware of interest rates and currency rates way back in the day. I think we're getting back to sort of like more normalisation for the cable levels.
Yeah, okay. Well, let's talk about the euro pound at the moment, because it's probably even more interesting, really, because you do have this tussle in this sense as well, that both central banks, the ECB and the Bank of England, will have to remain reasonably aggressive, even if the Fed kind of takes a bit of a breather. So the chart set up here, I mean, what are we looking at? What should we potentially be sort of inferring from this?
I think at the moment we're very range bound, and I think that is indicative of that interest rate differential that we're seeing, which is not too much. They're both in a hiking cycle. So the scope, I think, is once again for the downside. I'm sort of obviously a bit bullish on sterling at the moment. That 86, the figure level, so we're only 100 points from that, but they're big points in euro sterling, as we know. If we break through there, I think that 84 comes in. But once again, we've got to keep an eye on what's going on in Europe, what's going on in the UK. It can be a bit of a basket case because it is so big, because there's, I think we're going to start to see that north-south divide come in again in the European, in the Eurozone, and that's where you start to get a little bit of fractious sort of debate in the ECB, and that can lead to different forward guidance, and I think we're going to get stronger forward guidance from the Bank of England than we might do from the ECB, but this is just me spitballing and throwing 6 months ahead. I think short term still you probably want to be buying sterling on rallies, buying sterling on dips in this market. But let's see what the Bank of England does for us tonight.